Hello and welcome to Dr. Rachel's classroom. In this video, we will be discussing a few problems to understand the break-even analysis and the break-even point. So what is break-even analysis and break-even point? Break-even analysis helps determine at what level cost and revenues are in equilibrium. It is basically a system of determination of that level of activity where total sales are just equal to total costs. And break-even point is that point of activity, that is sales volume, where the total revenues and total expenses are equal. It is basically a point of zero profit and zero loss. So let's move on to the sums. So first question, they are asking us to find the break-even point. They are given basically two scenarios. One scenario is to find the break-even point for the given data. They have given the budgeted output, fixed expenses, variable expenses and selling price. The second scenario is, again they are asking us to find the break-even point for a new selling price. So first we will address the first question of break-even point. So how do we find the break-even point? Break-even point in units is calculated by dividing the fixed expenses by contribution per unit. So for this we need to first calculate the contribution per unit. So how do we calculate contribution per unit? We simply subtract variable cost from the selling price. So first, to find the contribution per unit, the selling price here is 20 rupees minus the variable cost, which is 10. So the contribution per unit is rupees 10 per unit. To find the PV ratio, it is contribution divided by selling price into 100. 10 by 20, 20 is the selling price. So the break-even point in units is fixed cost divided by contribution, which is 50,000 units. To find the BEP in value, fixed cost divided by PV ratio. So to find the new BEP, if the selling price falls from 20 to 18 rupees, so the new selling price is 18, so the contribution will change from 18 minus to 10, 8 rupees. The new PV ratio is contribution divided by selling price into 100. New break-even point in units is fixed cost divided by contribution, and in value fixed cost divided by PV ratio. We'll see one more sum. Here they are asking us to find the selling price if the BEP is brought down to 4,000 units. So again we have to first determine the BEP for the given data. They have given us variable cost, selling price and fixed expenses. So first we need to determine the contribution, which is selling price minus variable cost. In this case it is 100 minus 60, so 40 is the contribution. BEP in units is determined by dividing fixed cost by contribution. Fixed cost here is 2 lakhs divided by 40 rupees, so 50,000 units. Now the second scenario, what will be the selling price if the BEP is 4,000 units? So we know the formula here. So we simply substitute the values that we have in hand in the formula. So BEP in units is 4,000. Fixed cost is 2 lakhs divided by contribution. Contribution is basically selling price minus variable cost. Since we do not know the selling price, we are marking it as X minus variable cost is 60. So By finding the value of x, we are able to determine the selling price. So the selling price is 110 rupees if the BEP is 4000 units. Now let's see one more sum. Again they are asking us to find the break-even point in cash. They've given the selling price, variable cost and fixed cost. In addition, they've given one more information that depreciation is included in the fixed cost. So how do we calculate BEP in value? So contribution is selling price minus variable cost. PV ratio is contribution by selling price into 100. Fixed cost, if it includes depreciation, we have to deduct it. So 2 lakhs minus 40,000 divided by PV ratio. So the break-even point for the given data is rupees 8 lakhs. Thank you.